Hello and welcome to another episode of All Things Money. I'm your host Fatima Attarwala. My guest today is Ahmed Ali Siddiqui, who is the Group Head of Consumer Finance in Meezan Bank. Hello sir, welcome to my show.
Islam.
Walaikum Assalam. So I think recently, especially with the Gen Zs, there's a lot more interest in investment in financial instruments, especially the Pakistan stock market. So, and then obviously as a Muslim majority country, we want to make sure it's Sharia compliant. So could you walk us through the different instruments that are available if an average investor wants to invest in Sharia compliant instruments for small denomination like 5,000 rupees, 10,000 rupees?
There are a lot of options now available for Sharia compliant investors, but like you have to open an account with Islamic bank, let's say any Islamic bank, there are a lot of options now available. Then you can open your account in the Pakistan Stock Exchange, and there is a separate index for Islamic stocks. So you can buy those stocks and you can invest, and you can buy it for 1,000 rupees or 5,000 rupees or 10,000 rupees. Then there is another good thing that has happened, that you can buy Sukuk, which are Sharia compliant Islamic instruments which are issued by the government of Pakistan, and they are now listed at the Pakistan Stock Exchange. And the minimum investment is just 5,000 rupees. So with a 5,000 rupees investment, you can buy a government Sukuk. You can also open an Islamic mutual fund account, and it's just again 5,000 rupees. You can open an Islamic bank account, just 100 rupees to start with, and you can top up your amount. And then Islamic stocks are available. And then there are other options for NRPs. There are a lot of now options available in the Pakistan market. And in terms of even mutual funds, you can go in the equity market, you can go in the commodity funds like Islamic gold funds, you can also invest in the Sukuk funds, you can also invest in the low risk income generating funds. So now I think the market is expanding day by day for Islamic investors. Gen Z can invest, and now we are also thinking to work on something called tokenization for Sukuk and other real estates, where they are more attractive for the Gen Z they can invest through their app. So there are options. Alhamdulillah, there are lots of options available today, and more are coming very soon.
There's a general perception that the rate of return that you get from a Sharia compliant instrument might not be the same, like you might get a better rate of return from a non-Sharia, like a commercial bank, especially in a high interest rate environment. So what would you say?
We need to understand and how the Islamic banks work, or how they share the profit. When you invest in an Islamic bank, actually you are sharing profit and loss. So let's say you were open an account in an Islamic bank. There is a partnership agreement between the customer and the client and the bank, and the bank is not promising a fixed return. What the bank is promising, that whatever we have earned, we will share at least 50 to 60% of it. So this is how the Islamic banks normally work. You open an account in an Islamic bank. If they are earning, let's say 20% in a high interest rate environment, they may share up to 60%, or in some cases they share up to 75% of the profit. So the customer is getting profit because of the higher income that is earned by the Islamic bank. And if the rate goes down, the inflation goes down, then obviously the return of Islamic bank goes down, and as a result the return of the depositor also goes down. But this is the good thing, is that it's reflective of the economy, the economic performance, the profitability that is earned by the Islamic bank. It's not unlike a conventional bank where you fix a rate. If you are unlucky, you fix the rate at a lower rate scenario for next 5 years, then you are stuck with that rate. So in Islamic banks, and the customer demand is actually, they don't want a fixed return, they want to share profit with the Islamic bank. And our customers' feedback is that if they know how it works, they are happy. And there are options. Actually, sometimes people confuse that a saving account is a investment account. Saving account is for keeping your excess money, the money that you need for your daily use. However, if you want to invest, then the options are, you go to Islamic mutual fund, you can invest in a term deposit of Islamic bank, you can invest in a Sukuk. So sometimes we keep our money on a daily transactional account and expect a higher return, which is probably not the right way to go about it. If you want to invest, you can select the best product according to the risk that you want to take.
So for example, there's somebody who went to a savings account when the MPC rate was 22%. So in a high interest rate environment, they went and got a savings account in a conventional bank. compare that to somebody who opted for Sharia compliance. So again, that's profit sharing. So wouldn't their returns be low, especially right now when there's so much macroeconomic crisis going on?
No, in case of saving account, the State Bank regulation for conventional banks is that they have to pay a certain amount which is below the discount rate or the policy rate, because they are not sharing profit. It does not depend on how much they are earning. But for Islamic bank, the regulation is different. The regulation is that you have to share actual return that you are earning. So there may be scenarios where in a high interest rate scenario, a conventional saving account is paying a slight higher profit to a consumer, and the Islamic bank saving account is not paying that same amount of profit. But again, both are different demand of the customers. In one case, the customer is not concerned about the nature of profit, is not concerned about risk sharing or profit sharing. In the other case, the customer is very much concerned that they don't want a fixed return, they want an actual return of the performance of the bank. But again, as I advise that saving account is for transaction purpose, or current account is also for transaction purpose. But if you want to invest, then select an investment
so that would
product.
be mutual funds, equity funds.
Mutual funds, equity funds, or even in the Islamic banks you have long-term investment certificates that you can invest. So you have to make the right choice, and the purpose of your investment should be very clear to you.
So the parameters are what is my risk appetite, how long do I want to invest, am I investing for a certain goal. So based on all of that, they should decide on the instrument, not on whether it's a fixed interest environment, conventional bank versus Sharia bank. So basically the returns of Sharia bank are as competitive as…
Yeah, generally we are competitive, and it is shown by the growth that Islamic banks are seeing. Now, you see last quarter the Islamic bank, the deposit of the Islamic bank grew by 1.2 trillion approximately. It's a very massive growth.
That is a huge amount. Is it like, so did all banking channels increase investment or got more deposit, or was it just the Islamic bank that had the good numbers?
What we have seen that the conventional banks have converted their branches to Islamic. Their customers are shifting.
They have to, right? That's the state bank's mandate.
That's the constitutional requirement actually. By January 2028, the law says that you have to convert to Islamic. So the conventional banks are opening their Islamic branches, closing their conventional branches, and the customers are shifting happily. Then Islamic banks are also growing, and the demand is quite aggressive, at least in the market. So people are now have more confidence that Islamic banking is a better way, it's a right way, it's an ethical choice for the consumer. So we have seen I think a holistic growth in not only in the deposit side, in terms of financing. Again, I was surprised to see the number. The last quarter, Islamic banks grow by 1.5 trillion in just 3 months. It's like 7% growth in just one quarter.
Just one quarter.
Which was actually I was quite surprised that now Islamic bank financing share is 38%.
So what are the growth factors? Why are people just suddenly waking up and realizing we should invest?
I think sometimes there's the momentum is increasing every day actually. Conventional banks are shifting their portfolio to Islamic. Consumers are more demanding Islamic. Corporates are demanding Islamic financing. And so it's I think a holistic demand that is coming up from the corporate sector, from the retail sector. Even now government is regularly issuing Sukuk, and there is a concern, probably there is a strategy that they have to convert their debt portfolio to Islamic. So I think every factor is contributing towards the growth of Islamic finance, and it's also in line with the global phenomena of growth of Islamic finance.
Having said that, we are in 2026, Islamic banking is growing phenomenally fast, if I take your numbers. But by 2028, would the entire ecosystem be completely Sharia compliant?
It's a real challenge actually.
How far away are we from that?
Because in terms of deposits, we are around 27-28%. In terms of financing, we are 38%. In terms of branch network, we are 42%. So you can say you are in some way you are halfway. In some parameters you are one
Then
third.
again, in 2 years, it doesn't seem like a very achievable goal, not to the extent that
it's a very aggressive target, I must say, and there are still some hurdles as well. The government debt borrowing is a significant hurdle. If they fail to convert into Islamic, then obviously they will. But it also raises legal questions. What will happen if you don't convert?
Right.
Because
That's a very good question. Yes.
that's a if you don't convert, can you say that I will not follow the Constitution of Pakistan? I have no answer to that.
To not comment on the strength of the Constitution of Pakistan and how easily it is changed. What happens if it's 2028 and the government wants to raise a Eurobond or get a loan from IMF and it's not Sharia compliant?
And that's a very strong, big legal question mark for all of us. But why go to conventional? If we can issue a Islamic instrument, Islamic bond in the international market, even Panda Sukuk we can do the domestic Sukuk, and we are doing it very effectively and cost efficiently. The last report of state, the Ministry of Finance suggests that we are saving at least 1% on the Sukuk.
1 percentage point.
So if you are saving 100 basis point, then I don't see.
So raising funds from Sukuks costs less in servicing.
Yeah.
For the government than conventional.
Yes.
So why not just completely issue Sukuks? Is there enough appetite for that?
The appetite is very high. And we say, and the industry says, you come up with whatever amount you want, it will be subscribed.
So currently, like at the time of the shooting, a lot is happening. We have been told that we have to return, or we have already returned, I think, the UAE's 3.5 billion loan, and then we have financing from Saudi Arabia and Qatar. So within that ecosystem, while we are under the IMF program, how does the country become completely Sharia compliant? How does that fit into the global finance system?
You see, this is a very common myth that IMF or World Bank or Asian Development Bank or any other international financial institution is actually stopping us to convert to Islamic finance. They are not doing. They are sometimes pushing us actually to do Islamic finance, because Islamic finance has become systemic in Pakistan. It is a solution for access to finance to a lot of people of Pakistan. It is a solution to increase the savings. It is the solution to increase documentation. I was involved in some discussion with Asian Development Bank. They are pushing the government of Pakistan at one time to issue Sukuk. The green Sukuk that was issued by Pakistan, it is one of the recommendation of Asian Development Bank that Pakistan should issue a Sharia-compliant Sukuk in the market. So IMF, they have their own sector specialist on Islamic finance. World Bank has a global center of Islamic finance in Turkey. So it's not they are stopping us. Probably we have to fix our own shop and our house.
Say we are a Sharia compliant country entirely, can we still go into the IMF program?
Yes.
Then how would that work? So we have to return the debt in a certain amount, we have to do the debt servicing and all that. If we are within Sharia finance, then how is that modality different? Because we still have to.
For example, Pakistan has successfully issued 4, I think, or 5 Sukuks in the international market. Actually, I think it's 5. We have issued $4.6 billion of Sukuk in the international market already. So we have experience for international market Sukuk. We have done deals, bilateral deal with different countries in GCC on Islamic principles. Asian Islamic Development Bank Jeddah works with this Pakistan government on Islamic principle. So the multilaterals they already know Islamic finance. IFC know Islamic finance, World Bank know, IMF know, Asian Development Bank.
Has IMF, under their all the different programs they have they extended funds under an Islamic Sharia compliant framework?
Actually, what I understand, and based on my interaction with these agencies, that they demand, or their expectation is that the local government should ask them. So if we ask them and if we work with them, I don't see a problem that they will convert our financing under Islamic mode. The real challenge is when they go for Islamic mode, there is more monitoring and utilization requirement. If you are getting a Sukuk for building a highway, then you must build that highway on time. So that's probably the real challenge.
Right.
You must utilize the funds specifically for the purpose you are getting it. So, and this is actually more efficient and more beneficial for a country like Pakistan.
For the country, yes, not for the people in charge though.
So for the country like Pakistan, if you are getting assets developed, infrastructure developed, solar parks or dams and highways, so that's a good news. So IMF, World Bank, even CPEC can be done under Islamic mode, and there were efforts when the CPEC was started, And there was an institution in China that is called Center for Advancement of Islamic Finance.
Wow.
And because this, we call it CPEC, internationally the Chinese people call it OBOR, One Belt, One Road. And this One Belt, One Road is not just limited to Pakistan, it's passing to approximately 60 countries. And out of that, probably 26 or 25 are Islamic. So they know, and they did their homework, that when we go to these Islamic countries, we also need to understand how the Islamic finance work. So some probably this is a myth, more of a myth. Even you talk about Saudi market. According to the latest report that I see from the IFSB, Islamic Finance Services Board of Malaysia, 70% or more the Saudi market is already Islamic. So Qatar is aggressively growing its Islamic banking. So they understand Islamic banking. So if the government funds provided by the Saudi government, for example, we can also place them under Islamic mode, because they understand Islamic finance. There is no, that it is not new to them. Actually, they are much ahead of from Pakistan in terms of Islamic market share or Islamic Sukuk transaction.
So you have, so the cost of servicing of a Sharia compliant loan for the government is 100 basis points lower.
At least.
Yeah. Then you have that it is more efficient, because once you issue a Sukuk for an infrastructure project, that has to be seen through.
Yeah.
So you can't just use the funds elsewhere. So it's more efficient. And so why hasn't this changed, this transition taken place when there are so many positives for it?
I think there is a good activity for from the last 5 years. We see that every year the size of the Sukuk is increasing, which is a good news. Even I think last week or 2 weeks back, I saw the new auction calendar from Ministry of Finance, which was published by the Pakistan Stock Exchange. The government is planning to raise 1.9 trillion of Sukuk in just 3 months.
1.9 trillion, wow.
So, and in the last year for 2025, just for the reference, we did around 2.2 trillion. So what you did in the whole year, you are planning in just 3 months.
Will there be appetite? Will there be buyers?
Appetite is, even if they do a double of it,
really?
It will just go through.
Where is the appetite coming from?
Coming from the Islamic banks, from the conventional banks who are eyeing for a conversion, because many of the conventional banks, they ask us, we want to convert, but we have to get rid of the T-bills and PIBs because we want an Islamic instrument. So there are banks who are aggressively in the conversion process. So if the Sukuk is available, they will do. Islamic mutual funds are aggressively buying. And now the pension funds are coming up, the corporate provident funds are coming up and buying the Sukuk. So the market is there.
So you said that the next quarter, in a quarter, you'll have, they are raising 2.2 trillion in Sukuk.
1.9 trillion.
So 1.9 trillion, last year they had 2.2 trillion,
yeah.
And now they're going to raise 1.9. What is that in comparison to the T-bills and PIBs? How much
PIBs are still on the very high side, because as I mentioned that around 14% of the Pakistan debt is under Islamic mode and the rest is in the conventional side. But the government has also, I think, realized that Islamic is more efficient. Yes, there are certain processes that you have to follow because it's Islamic structure. You have to have a project or a real asset. You can't just issue a piece of paper in the air and call it a Sukuk. You can do it in a T-bill, but in a Sukuk you need to have a real asset, a real project, or some infrastructure, asset available in the pipeline to develop a Sukuk. So, but if this is happening, we can do a lot of more transaction into this.
So as you said, 14% of the sovereign debt is Sharia compliant. That means 86% is non-Sharia compliant. Now, if over the next few years, even if it's not by 2028, it's by 2030, 2035, the government wants to convert that into Sharia compliant. So it will need to build more infrastructure, have more businesses, more projects. So
you can do both. You can liquidate the existing infrastructure projects or assets. We call it securitization, and you can do that. And currently, we are doing this securitization of the existing assets.
What does that mean? Can you walk us through it?
For example, the government owns a airport. The worth of that airport is, say, 500 billion rupees. You ask the investor to buy a share in that airport. So investor becomes the owner of the airport asset, and the government then take that asset on rent. So the government is using the asset, they are paying the rent to the Sukuk holder, the investors who actually have a certain percentage of asset ownership in that airport. So you have in a finance sense, I say there is a dead asset or an illiquid asset. You convert that asset into a liquidable Sharia compliant security, and you get the funds and you invest in a new project, or you pay off your conventional debt to become Sharia compliant. So the investors are not just buying a piece of paper, they are buying a share, or they are investing in Pakistan in a government asset. And then you can expand this, you can come up with new projects, new industries, new solar plant, solar parks, and then you can also raise Sukuk for them and use that proceed to build that plant or in the solar farm, and then use the income generated by that asset to pay the rent of the Sukuk holders. Or you can have a profit and loss sharing Sukuk as well. So Sukuk is a very dynamic product, and if according to one data, around 40 countries have issued Sukuk globally. There are Islamic countries and there are even non-Muslim countries who have issued the Sukuk, and they are getting a benefit from it. Even UK did I think twice the sovereign Sukuk for the promotion of Islamic banking in UK.
So if I were to play devil's advocate over here, over time we are trying to convert our billions of dollars worth of debt into Sukuk, so we will need assets for it. Now, what's to prevent some other countries, high net worth individuals, buying a lot of Pakistan's assets, airports, railways, whatnot? So wouldn't that dilute our sovereignty of critical infrastructure?
When you buy a T-bill or a Pakistan investment bond, the security of that bond is the sovereignty of Pakistan. You give a sovereign guarantee. So if God forbid we were not able to pay on time, the customer can actually access anything. This happened when our in a Recordec case, we know that certain assets which belongs to PIA were held by the court because they say you have given a sovereign guarantee. But if you issue a Sukuk on just a road, the first recourse is the road.
Right.
And where that person can take a road, they have to operate that motorway or a airport. So it's a less risky, and you are actually limiting your risk to a particular, in context of Pakistan, it's a very small asset. So that's a more risk management approach, a more prudent approach actually. Although it's Sharia compliant as well, but it's a better approach for the government as well.
You mentioned that the UK government has issued a Sukuk. So what would be their reasoning?
In UK they want to promote Islamic finance, and I had a meeting a couple of years back with Bank of England, and they told me that they have similar number of full-fledged Islamic banks as we have in Pakistan. So at that time there were 4 full-fledged Islamic banks operating in UK, and we have 4 full-fledged Islamic banks operating in Pakistan.
So is that one reason could be that they have a large Muslim population, so they want to cater to it. Is there an economic, monetary reason to
one of their Prime Minister, I think Gordon Brown, he mentioned in a speech on the World Economic Forum that we want to make London as a hub of Islamic finance.
Why? And
we will offer every possible benefit to the global investors so they can come and invest in London.
So what are the economic and monetary benefits to London?
Because if you are offering product which is attractive to Muslim investors across the globe, then obviously people from the GCC, from different part of the world who want Sharia compliant solution, they will come and invest in UK. So that obviously every country wants to become a hub of investment. So London was playing their card very well. The Bank of England is supporting Islamic finance. Actually, they have changed their tax laws to facilitate Muslim investors, and still we don't have that change of law in Pakistan.
Oh wow!
So the parliament changed the law. So if you are let's say a homeowner, you want to buy a house in London with the Islamic bank, and if an Islamic bank buy the house and then sell it on installment basis or on some Islamic mode, the bank or the customer don't need to pay double taxation. There's only this transaction, although it has 2 sale elements, but it will be taxed only once.
And Pakistan will have double
If
taxation?
if we have to do it that same in the same method, I will get the title registered in the name of my bank, and then I have to sell it to you. We have to pay twice the duties. Although there are Sharia solutions to it that do not register on a separate name, but they are facilitating the transaction for Muslim investors. And I asked this question from a central banker from England, and he responded that, look, for the common man, we have around 4 million Muslim in UK, and they are the citizen of UK, and it is the duty of the Central Bank of England to provide those Muslims a financing option, a banking option which is according to their faith. So they are catering their local population. They are also trying to become a regional hub for Islamic finance, and there are a couple of products that are offered out of UK which Islamic banks invest, or they are attracted to that options.
So you mentioned panda bonds that are sukuks. So panda sukuks.
Panda sukuk is
panda
possible.
sukuks, right? So that is yuan denominated sukuks. So do you think that would be, and right now we have this whole Strait of Hormuz that is being blocked. At the time of recording, Trump wants to block it as well. And then this entire conversation that Iran would want to have a toll on the Strait of Hormuz, and then that toll could be yuan backed. So within all in this scenario in which China is pushing forward to have a petro yuan versus a petro dollar, where does panda sukuk fit in?
If we want to issue a panda bond from Pakistan, and we are actually evaluating this proposal for quite some time, my take would be that it's better if you issue a sukuk. Why? Because those investors who are indifferent to Islamic or conventional, they will come anyway. But there's a lot of investors who are looking for Sharia approved yuan denominated instrument, and Pakistan could be one of the pioneer to issue a sukuk. So otherwise you will exclude all those Muslim investors or who are Sharia concerned investors from this offering. And I see a lot of Islamic banks globally, they may be a good target market to invest in this sukuk. Lot of high net worth individuals they want to diversify from dollar, euro, and probably yuan could be a new destination or currency for investment. So why not offer something which is acceptable to a wider audience? And if it is acceptable to a wider audience, generally you get a better pricing for it, because more people want to invest. They say, okay, we will invest at even a lesser premium because they don't have the option available. So I think for a country like Pakistan, sukuk would be a better option because it will attract more investors.
So Pakistan has a tough time raising funds at reasonable interest rates, because again our macroeconomic crisis. I think recently Fitch maintained our rating NP minus or something. So if we were to raise sukuk instead of bonds, would we get a better response?
If we market it well, we position it well, I think we will get a better response.
But then again, we would need an asset against that sukuk.
Yeah, you need an asset, or you need an active project or where you will invest the money. And it's not that Pakistan don't have assets. We have a lot of assets available. Like in the last few years, we have issued more than 6 trillion or 7 trillion worth of sukuk in the local market, which is equal to I must say $20 billion approximately. So we have this much assets already available.
Would you be able to detail which of these assets were sukuk?
For example, Pakistan has used the highways and motorways. We have used the airports. Recently we are using the railway, Pakistan railway related assets. So the government, actually the government of Pakistan has lot of assets holding in terms of different state entities. So there are different authorities like civil aviation, the railways, and the other authorities, and they have a very big asset holding. So we can explore that potential, and we are actually the Pakistan government is actually doing it, and it gives more trust to the investor, because now they know exactly where they are investing, what ownership they are getting out of their sukuk. So this can be done, and then there is a working going on to develop an asset light sukuk structure, which means that you may have a 50% asset and 50% trade transaction.
And what would that mean?
For example, let's say just a loud example, Pakistan imports oil on a regular basis, and let's say one shipment is $10 million. The Sukuk holders can buy this oil and sell it to the government of Pakistan on a deferred payment. And then you can also attach a similar asset, so you can double your issuance of Sukuk with the asset light model. And this has been done by the different countries in the world. People, they can combine different Islamic modes, a sale plus a lease transaction, and you can combine those two modes and you can issue Sukuk. Malaysia is doing it, Saudi Arabia is doing it, Sharjah has done it, I think Oman has done it. So, you know, different Islamic countries all have already experimented with these type of instruments and they are successful.
Is there any, I mean, have you had any interaction at the government level? Is there appetite for this?
Yeah, actually what we are expecting the first issuance very soon. Probably
for a blended model.
Yeah, probably in the next, I hope in the next 2 months or maybe earlier.
Right. And the purpose of it would be, as usual, to raise funds for the government. So
it could be to raise funds, to convert their conventional debt, to get a economical source of funding.
Because again, we have the 2028 target, but only 14%, 86% is not. So is that part of that process?
You know, if we see the share of government borrowing in the overall banking sector, you can see it's more than the deposits. If the government borrowing converted to Islamic, you forget the private sector, forget the corporate sector. If we just able to convert the government borrowing, I think we are more than 90% then.
Yeah, I think that the biggest criticism the banks get is that they just want to lend to the government. They do not want to lend to the small guy.
It's a fair criticism.
But that still happen within a Sharia-compliant
It's a fair criticism, but that's the reality, how the Pakistan market is. In Pakistan, the biggest borrower or the biggest person who needs financing is the government of Pakistan. Let's say Islamic Bank say, or all the banks say we don't want to invest with the government. How the government will raise funds? There is no option.
Nobody is stopping the banks from investing in the government, but then consumer finance, consumer credit, companies credit, that corporate credit, that gets frozen out.
As I mentioned that in Islamic banks, currently most of the Islamic banks are in a better position when it comes to financing. Their financing to deposit ratio is better. And our focus is also on financing. But if one of the financier in the market is government itself, the option we have to work in the long run is we have to develop our capital markets. So like the rest of the world has done. So the government should have an option how to raise funds from the retail investor, from the public at large. But currently the government is also under pressure maybe, or they have limited options to go anywhere. So unfortunately or fortunately, they have to come to the banking sector to bail them out or to get them.
But again, the banking sector says that we pay abnormal taxes, supernormal taxes.
You know, it's a chicken and egg situation, yes, but it has to be resolved if we develop our efficient capital markets. For example, if we develop a good capital market solutions for retail investors in Sukuk, we can attract NRPs, we can attract global investors in our Sukuk portfolio, then you have an alternative option. You don't need banks only. The banks will still be there, and they are there in any part of the world. But obviously in Pakistan, the concentration is more, or the government is more focused or relied on banking sector to invest in their bonds or Sukuk.
Say you were in a position of power. Today you had complete authority from the government and from the state bank to bring about policy changes that would increase Sharia compliant adoption and also increase financing for SMEs for the corporate sector. What policy changes would you bring about?
First, if I start from the retail market, we need to push housing finance in Pakistan because still we are way behind in the housing.
See, the problem, the houses, at least in Karachi, houses are exorbitantly expensive. We cannot afford to buy the house. And how much financing can you get? I mean, if you get like 2 million, 3 million, it's just, it doesn't even cover a room.
The good news is that recently the government has introduced a scheme up to 10 million financing at just 5% rental rate. and this rental rate is fixed for next 10 years.
And this is Sharia compliant.
Yeah, there are Sharia compliant option, and there is our interest based option, but I think people will prefer Islamic option, and most of the banks are now working on it. Our bank is also working on it, that we are aggressively focused on increasing our housing finance market share to, and especially this scheme is focused towards salaried class. Because this is the most troublesome class, because they have fixed salary, they can't just change their budgets, and if they're getting home financing at 5% rental, that's a very good deal, I must say. Secondly, using this digitization that is happening in the market, I think we need to focus how we can capture the data through like point of sales terminals, through all those e-commerce happening, and use that data to offer limits to our SME, and we are also working on that. Recently we did a offering to our 5,000 SME customers based on their data.
5,000 SME customers, what percentage of the total portfolio would that be?
If we get let's say if we get those 5,000, just as an example, we can increase the customers by 200%.
Okay.
So now the technology is playing a part, and then obviously the good thing very recently that has happened, that the State Bank has relaxed the requirement for SMEs to submit audited financial accounts, which was a major showstopper. No SME has an audited account, but they have their bank accounts, they have their other documentation available. So now banks are developing scoring models, digital credit analysis for how to finance SME, but obviously there is a financial literacy gap as well.
There's a financial literacy gap again I would say there's a lack of appetite within most banks, because I have heard Mohammad Aurangzeb say that so many times, that the microfinance, the wallets have extended credit to SMEs, but the major banks, the conventional banks as well, they have not been focusing on that portfolio, because why would they? They have the government.
Yes and no, because yes, they have the government, but now how much you can go to the government, because there is
the government's appetite is quite large.
Yeah, but there is also a risk if you just invest in in the government instruments.
But isn't the government instruments the most risk-free of all instruments, because there's a sovereign guarantee?
Yes, but if you are investing at a rate and you're fixing, let's say, now you're fixing your investment for 10 years at a very lower rate.
Pakistan has not had a very low rate in quite some time. We have been in a.
But still, if the current rate is half what we have.
Yes, like, but if this crisis continues and Iran and the US conflict continues, then we are headed towards a high
there is a risk as well.
Yeah.
But despite having all that option, the banks are focusing. At least Islamic banks are focusing, and the customers are also expecting that they must offer financial solution. And the good news that I know from the data, that currently Islamic banks are leading in terms of consumer finance space. The car financing, the home financing, almost in terms of home financing, I know that 60% of the market share or even more is with Islamic banks. In terms of car financing, I can say it's probably half Islamic and conventional. And as we move along, we are also seeing that more SMEs are coming to Islamic banks. So this will happen, but there are challenges of documentation. Sometimes another key challenge that we are discussing is the recovery law. Because if you don't have efficient recovery laws, efficient court mechanism, then banks will remain reluctant. For example, I have been to different countries, and I know that if someone defaults on a business loan, they can't even get a home for rent. So because even the house owner check your data, your credit bureau reports.
But there is no such data set.
There is no such concept in Pakistan.
If
a person default,
go to some other city, and
they go to court sometime, they take stay orders. This has to be resolved. So probably the main policy refinement has to be, maybe if we have a law that the banking dispute will be settled in 30 days. The court will, whoever is at the fault.
And that is not specific to Sharia-compliant banks. Across the banking sector,
banking.
That's a common thing,
some bankers are, because of their bad experience in the past, they are now risk averse, but we have to change this. But so I think one of the main policy change is the recovery laws and the recovery time. Maybe we need to have specialized banking courts with judges who probably are chartered accountants, or who are MBAs, or who are the banking experts, and they can sit along with the other judges who know the law, and they can decide court cases in few days. Similarly, we also need to give more openness to the digital revolution that is happening. So if you don't have the record in terms of papers, but you have the numbers in terms of data, how much the customer is doing sale on his point of sale terminal, how much his e-commerce earning is there, how much his social media page is active, these parameters can enhance our coverage to SME.
So you have been a regular contributor for my business and finance pages, and I remember an article in particular in which you outlined that the HR challenges the Islamic banking sector faces, that there are just not enough people to work in banks who understand how Sharia-compliant banking is different. So do you think the challenge is still there?
The challenge is there, because when we did a study and when I was a director at IBA, we estimated that 150,000 bankers need to be retrained.
150,000 bankers. And are there institutes doing that?
And now the good news is that now every major university is offering Islamic finance. Even I was a director at IBA, but we helped to establish at least 10 more institutions in Pakistan, and now this number is growing every day. So now top universities are offering Islamic finance, and they are working, they are playing their part to build the capacity, but still it's a challenge, but it's not an unmanageable challenge, because if each banks take on their, because for a bank it is probably 10,000 staff or 5,000 staff, and to convert a branch you just need to train 15 to 20 staff. So if you break down the problem, it's not unmanageable, but if you just sit there and do nothing, then that's a serious problem, but it's still a challenge. Because another challenge that we see, that our normal finance graduates, when they come out of top universities, like I was in IBA, my friends are there in LUMS, they're teaching there, but when a graduate coming out of these institutions, still today all of them don't know Islamic finance. And now I normally say to my colleagues that if you don't know Islamic finance in Pakistan today, probably you don't know finance completely.
No, absolutely. If the entire system is supposed to convert into Sharia compliant in a few years, then every finance graduate should have some working knowledge of Sharia compliance. Otherwise, how will you work in Pakistan?
Yeah, there was some step by Sindh HEC. A few years back we worked with them, and they issued a circular. They asked all the universities in Sindh that they must introduce a mandatory course on Islamic finance and Islamic accounting for all their business graduates, and also include a 20% portion of Islamic finance exposure to their normal business courses. For if you are studying corporate finance, so you can understand.
Should have a module on
you should have a module in the same course. So there is from this another challenge comes up. Are the faculty members trained? So we worked a lot with different faculty members, and we probably trained a couple of hundred faculty members in different universities, but still this is a challenge, that if we don't have the right faculty who understand what is happening in the market, how the finance landscape of Pakistan is changing, so sometimes they are not able to comprehend this, sometimes they don't understand what is happening in the market. You can have you could be a very good foreign qualified PhD from, let's say, MIT or Harvard or anywhere else, but if you don't know what is happening in the Pakistani market, this disconnect actually create more problem for us.
So I think so if you were to sum it up on the policy recommendations, one would be increased knowledge about Islamic finance across all institutions, so that anybody who's studying finance should have some working knowledge, because that's the only way that the country
and
can.
I will say that we should start from schools.
Schools?
Yeah.
So O-levels, A-levels?
O-levels, because you have a finance topic,
but then again, O-levels, A-levels is the Cambridge curriculum, and
but because we have we can introduce some mandatory topics there, and even if it's O-levels is a Cambridge based, let them teach us what Islamic banks are doing in UK.
Yes, absolutely.
Doesn't matter,
Yes.
what they are doing in France, how Luxembourg is issuing Sukuk, how Hong Kong is doing Islamic finance transaction,
Yes.
how Singapore is supporting Islamic finance. There are a lot of examples. And another revolution in banking, which is the ethical banking, the green banking, and Islamic finance. They have much common in. So you have common grounds. So teach them how different models of banking work. So at least they know that there are different models, there are different approaches of how to manage an economy.
So that when they are in industry, they have a holistic experience.
And otherwise, people, and now sometimes we have to hire the graduates and then we have to train them. Like at least let's sit in a classroom for 15 days or a month, because your degree is not enough. You don't know the right
and again, if you have an employee, you give them 15 days a month, that would not be as robust as it was woven since O-levels, A-levels, or even the undergrad program. And so that's years.
And even that we at IBA, we work to develop financial literacy booklets for 8 years to 10 years and 12 years small kids. Because from that time you need to teach them what is savings.
Absolutely.
How to open your bank account, how to keep your ED and pocket money safe.
Yes, I've been trying to teach my kids. It's
and then
an uphill task.
Also teach them the ethical principles that are related to the money matters. You should not spend on things which are useless. You should be, you should have a budget, manage your savings, what is the right type of investment, what is the wrong type of investment. So, these concepts can be built from the early age. They can be, further enhanced at
What age do you recommend these concepts start? Because I've tried with my 6-year-old, she just keeps giving away her money to whoever she wants to, her friends, either year.
I think what we find out that if around 8-year-old kid is now intelligent enough to understand, basics.
My 10-year-old keeps hoarding his ED, and if he wants something, he just asks me to get it. He refuses to use his own money.
So he's more intelligent.
I'll pay for it. And then I can't go and ask my son, no, you have to pay me. It's like, okay, fine, let it go. So yeah, I think kids are smarter than their parents.
And when I look at, they understand now very difficult concepts. So savings, money matters. Now they know ATM, how ATM works, how checkbook works, but sometimes they don't understand it properly. So if we just handhold them, we give them the right concept from the day one, and we also have to teach them the ethical investment side, because again, as a Muslim, as a Pakistani, that's also our duty, that we need to teach people that what is right, what is wrong, what is correct, what is not correct, and then we can build on this. And the good news is that very recently State Bank has allowed a 13-year-old kid to have his or her own bank account. I think it's an excellent step.
So Sharia-compliant banks also have a 13-year-old.
Yeah, we even when I was heading the product at Meezan, we introduced a bank account for just 1 month old. So you can have a kids account up to 12 years of age, and from 12 to 18 there's a teen account.
Wow.
You get a certificate, your own debit card, checkbook, and then people get motivated to save, and then they can spend.
I have to look into that. I would love to have one for my kids. Great. So if I were to just sum up this, I think financial literacy is very important, as you pointed out, from youth, but also financial literacy plus Sharia compliance, because that is where the system is headed. There is a lot more room and a lot more appetite for Pakistan to issue Sharia compliant instruments, which would be good for the people of Pakistan as well, because then they will be issued against infrastructure, and then we will be assured of infrastructure development rather than those funds not being misappropriated. And that while there is a myth that Sharia compliant is limited to Sharia compliant countries or Muslim denominated countries, IMF, World Bank, ADB, or even countries like UK and Luxembourg, they also have an appetite for Sukuk. So this is something we should work.
There are around 120 countries in the world where Islamic financial institutions are working.
So there's a lot more scope for Islamic finance than the potential is much larger than what is happening in Pakistan right now.
Definitely.
And the uptake is increasing, but the gap between where we should be and where we are is
still a lot.
Is still among us, because only 14% of Pakistan's foreign debt, total debt, domestic debt, total debt is
Sharia compliant.
Sharia compliant. Great. Thank you so much for coming to my show. That was a pleasure having you.
Thank you. Thank you.